Good morning, everyone. Good morning, everyone. Welcome to the Start Engine Summit. My name's Scott Culp, and I'm the lead content editor at Start Engine, which is an equity crowdfunding and STO platform that helps entrepreneurs achieve their dreams by democratizing access to capital. Before we get started, I'd like to thank you all for attending. I'd also like to thank everybody on the live stream. I'd also like to thank all of our sponsors today for help making this possible, including ICOX Innovations and Swarm. At this past April's ICO 2.0 Summit, we sought to chart a path forward to liquidity for tokenized securities. Now, only months later, with terms like STO becoming more commonplace, the potential for and necessity of tokenization is fairly clear. From business to bed and breakfast, from BTC to mac and cheese, tokenization is clearly on the rise. So today, we ask a different question. We set forth to ask how we can tokenize the world. And to answer that question, we have a lot of things planned. We have exciting panels. We have amazing keynotes, including from a former SEC chairman and the co-founder of Ethereum. We have pitches from innovative businesses. We have amazing opportunities for networking at our sponsored lunch tables, and also at what I'm looking forward to, the Sunset Cocktail Hour. And then finally, we also have a one-of-a-kind opportunity for you to literally steal cryptocurrency from a painting. That'll be at the end of the show. But clearly, there's a lot to get to, and so without any further ado, I hope that you'll join me in giving a very warm welcome to Start Engine's chairman of the board and co-founder, Ron Miller.
Good morning. Well, first off, thank you. We're honored that you joined us here today and found this room a little bit more attractive, perhaps, than the beach this morning because it was absolutely beautiful out there. But just by way of background, Start Engine, the genesis of Start Engine really became a reality out of the Jobs Act. And when Howard and I first met, what happened is that we saw the ability to raise capital from the crowd as being probably the greatest advancement for entrepreneurship in a generation. And the reason we thought that is because we in America are innovators. We innovate. We bring new technology and innovation into the market, but it's capital constraints that hold us back or hold many people back, particularly people of color, people, females, that don't typically have access to the capital in the same way that we would like to see them. So when the Jobs Act came along, we saw that opportunity to allow entrepreneurs to achieve their dreams by raising the capital necessary. And then, of course, another year or two later, along comes security tokens, and that's where we are today. Now, the one thing that I wanted to point out is that this is a conference that's very different from many others that you might see. And the reason I say that is because this is a community about people who believe in regulation and understand the importance of regulated security token offerings. You see, to live in a world where there's just simple lawlessness, the Wild West it's sometimes called, of crypto, is not sustainable for the long term. But the people in this room are the ones that believe that we have to legitimatize the ability for people to raise capital using cryptocurrency and security tokens in particular in order to have a sustainable, viable, and meaningful way to help American entrepreneurs achieve their dreams. And that's why we're here today. And so it's absolutely an honor and a pleasure that I introduce my partner and CEO, Howard Marks.
Good luck, man. Thank you, Ron. Thank you, everyone, for being here. And thank you, our sponsors. Thank you, our speakers, for giving it our time. And we'll have a pleasure to have Chairman Cox here as well, who's taking time out of his agenda to come here. This is a pretty important topic that we're trying to talk about. The summit here is themed this time, Tokenize the World. The whole idea is that you have assets, whether it's securities, gold, oil, paintings, horses, whatever you name it, can become tokenized and have a new opportunity for investors to participate is a really big idea. The idea that companies can go public is a big idea. This is really big. If you look at what entrepreneurs today are facing, it's an amazing opportunity as well to start a business. So we, in the United States, create about 400,000 businesses. These businesses are all in search of capital. You'll see on the chart here that there was a dip because of the Great Recession. However, we've recovered. But still, 400,000 plus businesses a year is pretty healthy. But who creates the jobs in our country? The jobs are created by the small businesses, by a lot of the people in this room. That's 65% of all the jobs. These are the jobs our economy needs to move forward. And this is why capital is important. So who raises capital in the United States? You'll see the venture capital here. It's very healthy. There's a lot of money being invested. Their role is very important. But you'll also see on this chart that they only raise money for about a couple thousand companies a year. That's the entire venture capital community in the United States. And you compare that to the number of companies that are being created, that is just too small, even though their role is important. But look at where they invested in. You only have a few states. I mean, California is a recipient of it, but it leaves all the other states behind in search of capital. And then to make things worse, there's only a certain kind of person who gets the capital in the United States. It's mostly men, and it leaves behind the women and the minorities, these people who are the diversity of our country who can also participate. And that is basically also an opportunity for all of us to participate in funding everyone else. Now, if you look at the public companies today, it's in decline. In the last 20 years, we've lost half the number of public companies. What does that mean? That means that investors have less opportunity to participate in the economy. They can't invest in more than 4,000 companies. That is really small. I mean, when you look at the charts that you have 400,000 new companies a year, then that's every year, by the way. And then you have 4,000 shrinking companies. That is too small. If you look at the IPO, which is a great opportunity for capitalizing a company, where you can raise capital from the general public, for the first time, it's in decline. And in fact, last year we had about 160 companies, and this year is not getting any better. So that means that investors don't have opportunity to invest in new ideas, but it also means there's not that many companies who are taking advantage of the public markets. However, here's the opportunity. Here's why we're here today. There are 5 million small businesses in our country. These are all employers. They employ people. They're the backbone of our economy. Compare that to the 4,000 companies that are out there on the public markets, and their total capitalization is around $30 trillion. It's a big number. But imagine, what do the 5 million companies represent? How much value is that? It's just mind-boggling. So I started investing in companies about 8 years ago, and I created Start Engine initially as an accelerator to help entrepreneurs and help LA become a technology city. And it went well, except that most of my 59 investments went to zero very quickly. They couldn't raise any money. And it just felt really, really harsh on these entrepreneurs. And I understand why some can't and some can, but it felt a little bit not arbitrary. It felt very biased and very cruel. And I felt very strongly there must be a better way. And guess what? Just as I was hoping, a new legislation came out called the Jobs Act. And I call that the first storm. The reason I call it the first storm is because there's another one coming, and you'll see in a few seconds. This act changes everything. In the last 80 years, an ordinary person cannot invest in securities. They can't invest in their neighbor because they're not wealthy. Only the wealthy had access. And the Jobs Act with regulation crowdfunding and regulation A+ is changing that in a big way. If you look at the forecasts from analysts, they're talking about a pretty healthy growth of the business in crowdfunding. And if you look at the UK, which has several years ahead of us, they have an advantage in time, are doing great as well. In terms of the platforms that are out there, a platform is actually a company that's registered with the SEC. It's called a funding portal. It's a member of FINRA. It's highly regulated. This is not just a website. These companies here, these platforms, are helping hundreds of companies. You see 160 companies going public. These public offerings, you're talking 500, 600. We're going to do about 300 to 400 this year ourselves. This is a real big change. The second storm, the ICOs, the initial coin offerings, have taken everybody by surprise. In the last 2 years, over $20 billion was raised. It's extraordinary. It shows the demand out there for people to invest in great new ideas, and it shows how companies, thousands of them, are taking advantage of capital. However, this is great, but there was no supervision and no regulation with any of this. And it puts us here in this room thinking about can we do it in a way that works with regulation. And here it is, the perfect storm. We got now the security token offerings. It's different than an ICO. It's regulated. These securities are using the Jobs Act to be able to raise money from the general public. Anyone in the United States that wants to invest can. And cryptocurrencies, which is and so modern. And this is how we're going to tokenize the world. Now, the last problem that needs to be solved, which is the most important one, is liquidity. People are not going to invest if they have to wait 7 years for an exit. So you have companies like T0, SharePost, Open Finance, Start Engine, Templum, Circle, Coinbase. These great companies are either registered with the SEC or are about to be registered with the SEC to become alternative trading marketplaces. These companies, these broker-dealers, are highly regulated and highly supervised because a lot of the exchanges today that trade in crypto, if you look at, there are problems with them, but if you look at the Attorney General from New York released a report, you see problems like trading against the customer, wash sales where people are creating fake volume and insider trading and pump and dumps and all the things we know exist out there because, again, these companies are not regulated. In bringing these great companies forward, when they bring out their platforms, it's going to change everything because now the investor is going to know that it's a level playing field. If you look at the liquidity premium, so public companies who are able to go public, access to general public, these companies have very healthy valuations because the public is going to determine the price. Well, private companies don't have that opportunity, but when you tokenize these private companies or these assets, you can see a premium. Some people talk about a 2 to 3 time premium. It's the market that decides. How do we get there? Pretty simple. Investors are going to purchase security tokens. Those security tokens are issued by funding portals or broker-dealers. Those broker-dealers have trading marketplaces where you can trade those security tokens. Transfer agents, these are registered with the SEC as well. They will hold records. Why? Because if you lose your private key, or if you lose your tokens, however you lose your wallet, they can be replaced. And that's critical. When you own an asset as a house, you own securities, gold, horses, whatever you own is replaced because that's your ownership and it's on record. It breaks the fundamental rule of the blockchain, which is decentralization, but it breaks it in a positive way. And there's a rule called 12G, which says that if a company has over 2,000 shareholders and over 10 million of assets, they have to register a public company. Well, that's not going to work for most companies because if you have only 300, 400, 2,000 shareholders, that's not liquidity. You need 10,000 shareholders, 20,000. Well, with Regulation A+, Regulation crowdfunding, plus a registered transfer agent, it solves the problem. So now we can have a real marketplace. And the blockchain is going to make it more efficient, more transparent. People will be able to see who owns what. They may not know the identity, but they know there's an owner, and all the transfers and trades are going to be public. Tokenizing the world is a big revolution, and I want to thank you for being here today.